Week 4, Reporting to Management. Here you can see on the budget sheet standard that cash is valued at $50,700. Including all other assets, the total assets for Gemstar Productions comes to $66,486.45. Here you can see that the total liabilities and equity equals $66,486.45. The ratio of liabilities to assets is 0. Both total assets and total liabilities and equity equal $66,486.45, as they should. Here you can see the profit and loss budget versus actual report. This report shows the amount of profit and loss in comparison to the projected budget. As of January 2015, Gemstar's income is less than its total expenses. However, only 76.9% of the projected earnings were brought in. Many times, income is less than total expenses at this time of the fiscal year, especially because expenses are usually very high and the company hasn't had ample time to bring in the expected revenue. This ratio is projected to change drastically within the next couple months, creating a positive use of the budgeted figures. Equipment rental fell above the budget by $250. However, once Gemstar returns the equipment, they will receive the deposit back, which will lower this figure below budget. Office supplies also fell above the budget, most likely due to the great deal on paper from Staples. However, the amount of paper purchased is estimated to last for at least 6 months. Salaries expense also fell above budget, as Gemstar had an extra employee on the payroll. As of February 1st, this employee has retired, which will allow the salaries expense to fall back below the budgeted amount. Here you can see that as of February 2nd, net income is no greater than the budgeted amount. Expenses are also within the parameters set by the budget. Items that fell below the budget included advertising, depreciation expense, insurance expense, interest expense, professional fees, travel and utilities expense. However, because the month of February is not over, these figures are hard to compare because they will continue to change throughout the month. Here is the statement of cash flows. The statement of cash flows differs from the balance sheet and income statement in 2 key ways. The balance sheet shows the financial status of a company at the end of the reporting period, but both the income and the statement of cash flows show the flow of activity during the reporting period. Cash in, cash out. Statement of cash flows reports in on a cash basis. The statement of cash flows report tells you, will you have sufficient cash at the end of the month to purchase additional inventory? Will you have the cash flow in the future to buy the new equipment you'll need to handle all the growth you're experiencing? Or will you have the cash necessary to purchase a new building for the planned expansion? This report shows that although cash flow seems to be well above average, after factoring in the accounts receivable and other accounts, a company still may not have enough money to pay its bills. However, Gemstar is continuing to perform above average. Because Gemstar is a startup, the primary cash input is from financing, loans, and common stock. As the company progresses, the primary cash flow will come from operating. For example, holding events, keeping expenses down, etc. Internal controls are a way to protect a company from fraud and other unfortunate problems. The first internal control that I recommend is to always request a W-9 form from vendors before setting them up with your company. This prevents the ability to set up fake vendors and protects the company from embezzlement. This control will be enforced by the bookkeeper. The second internal control that is recommended is to have quarterly internal audits to ensure that all funds are accounted for. This will prevent embezzling and other frauds. The CEO will enforce this. The third internal control is to reconcile all purchases with credit card statements and the check register. This will help prevent the use of company funds for unauthorized purchases. The bookkeeper will reconcile. The fourth internal control that I recommend is to perform weekly inventory on lighting and other equipment to ensure that customers have returned it. This will prevent company equipment from disappearing for months at a time with no log of who had it or how long it has been gone. The manager will supervise the employees who perform this inventory. And the fifth internal control that I recommend is to require all purchase requests for events planned by Gemstar to be approved before actual purchase. This will ensure that no purchases will be made without having a witness to ensure that the purchase is useful for Gemstar. The manager will approve purchase requests for employees, and all approved purchase requests will go to the CEO for documentation. Some key terms from business accounting include the generally accepted accounting principles, which are the rules that govern the preparation of financial statements. An asset is an item owned by the company and it is measurable. Short-term assets include cash, accounts receivable, inventory, prepaid insurance, and are consumed or converted to cash in less than a year. Long-term assets include buildings, vehicles, and land, and are items that can be converted to cash after a period of 1 year. The net income, or bottom line, is the difference between revenue and expenses. Gross profit is the difference between revenue and cost of goods. The general journal is a book where transactions are first recorded. And posting is the process of transferring the information in the journal to the individual accounts in the general ledger. And most importantly, the fraud triangle. These are the basic reasons for fraud as opportunity, rationalization, and pressure. References.